In today's video, we're going to be taking a look at Bitcoin on the macro chart, discussing the possibility for new lows, the bull run, and so much more. We'll also take a look at the short-term price action, see how that is developing, discuss the next move for Bitcoin, and key points to look out for. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to talk about Bitcoin on the smaller time frame and of course the macro charts. On the small time frame, we're going to be talking about the structural and technical indicators. We're going to be talking about the next move for Bitcoin and of course the overall price action. How is it shaping up? What is this looking like? And what the next move is going to be. For the higher time frames, we're doing similar things, talking about the higher time frame zones, trigger points, and of course the higher time frame trend. More importantly, we're going to be discussing the 4-year cycle and of course discussing the statement from a lot of perma bears, which is new lows are still likely. We'll be talking about that and we're explaining why, according to the current data we have, it is not the case. Now the probabilities could shift in favor later on down the track, and we'll talk about what will trigger that, but according to the data right now, then the probabilities are still not in favor of new lows. Anyway guys, before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel guys. We're here talking about Bitcoin on a daily basis, discussing the charts, the technicals, the data, the facts, no emotion, no BS, no hype, pure raw TA. If that is what you're interested in, subscribe. But more importantly, join us on Telegram. You'll get more of it. You'll get access to charts, updates, analysis, information, videos, educational posts, news events, everything in between in this Telegram channel. Second link down below. If you're interested in going a step further and lifting your trading game, guys, you can join us on our VIP channel. You can find our entire trading track record here and information about our VIP. You'll get access to 2 chats. Our main VIP chat where we post daily trading signals, entries, targets, stop losses, exclusive analysis, guys. We also have a group chat. The group chat has 4 components. Our general chat, where we just talk about random stuff in cryptocurrency. Our trading and chart chat, where everything we talk about is focused on trading, education, information, scalp trading, everything in between, guys, to make you guys better and more proficient and analysts and traders in here. We have a help chat to keep you going with any technical questions, and of course our daily videos are posted here as well, guys. If you want more information on how to join probably the best group on Telegram, you can go ahead and contact me over here. Let's go ahead and get into the video. Starting off with, of course, the market data. Bitcoin is up 3.17% for the 24-hour volume, pushing close to 80 billion. We're looking at liquidations now down 10%, and of course for the month of April we're around negative 0.27%. Not a lot of change for the month, very much holding sideways. Volatility index on the 60-day is moving slightly downwards. We are moving towards 2.92%, and for the 30-day, very similar stuff here, moving very much slightly in that downtrend towards 2.06. Liquidations for the last 24 hours, we saw a little bit of a chop going on, and then overnight in Australia time around 3 a.m. we've started to see a little bit of an uptrend develop, and the price moved upwards. A lot of shorts were liquidated in that rally upwards, and we have now seen quite a decent bounce for Bitcoin. It hasn't pushed up to our major resistance. We'll talk about the move in today's video, of course. Let's get into the DXY. The DXY has, of course, confirmed the double bottom, but the reaction from this bounce has been quite bleak. We haven't seen too much of an uptrend develop. We've seen a little bit more of sideways consolidation upon the breakout. Nothing too impressive. Of course, we did see a double bottom form on this horizontal support. This horizontal support actually spanning all the way back to this range here, making it over a 300-day long support line. So it is a major support. As you would know, guys, major support becomes major resistance, but major supports are also major zones of liquidity, and they are trigger points, meaning if we do lose this support level at 100.8, we are going to see a stronger move down for the DXY, which will result in the traditional markets breaking up, and based on where they are sitting, they could potentially break their higher time frame resistances, throwing them into a macro uptrend. Very important level we are on here, very key. And of course, the economic data that will be coming out this month, which we posted in Telegram, will be key in determining where the DXY will be moving. If of course economic data comes out positive, meaning interest rates are moving down, inflation is moving down, PPI all moving down, we are going to see the DXY drop, we'll see the US dollar lose strength, and we'll see the asset prices rally. On the flip side, guys, as long as the DXY remains above the support, we do have a slightly bearish bias here. On the short term, we do expect the DXY to continue upwards, next targets being these local highs if it does continue upwards. Again, until support is broken, support should be considered support. So keep an eye on that, guys. Let's go to the S&P 500. You can see the S&P 500 had quite a nasty rejection on the last daily candle, guys, dropping a few percent, nothing too insane, but it was one of the biggest corrections we have seen on a daily candle ever since March, 21st of March last month. So quite aggressive for a single day candle over here, around 1.6%. We did reject from our higher time frame resistance. So this is the higher time frame resistance we're just talking about. We had deviation over here. We do need to break above this high time frame resistance, more importantly, to see a rally to 4,300. That is going to be our next target. In fact, 4,300 being the high time frame trigger for a macro trend reversal. So right now, we're still under these two resistance levels. For us to see a rally upwards to 4,300, we do need to break through 4,200. And of course, if we do not break through 4,200, we are likely to come down and retest these lows, or worst case scenario, we're even likely to come down and retest this uptrending support. So keep your eyes on that chart, guys. Very important. Again, the DXY will play a massive, massive role in influencing where that is going to go over the next few days. Same goes here for the Dow Jones, guys. We see we're at resistance. We rejected from resistance. We saw about a little bit of a crash again. It's still same kind of drop down here on the Dow Jones, repeating down toward the downside. If we do not break above this resistance, we're going to see a move towards this dotted trend line. Again, the economic data is going to play a massive, massive role in influencing where these asset classes go, where these indices go over the next few weeks. So keep an eye on that, because we do have a lot of economic data coming out within the next 2 weeks. If we do break upwards, we can expect a macro trend flip, which will push us much, much higher. Of course, stocks and cryptocurrency are correlated to a degree of 70%. So when we do see the stock market fall, we more generally see Bitcoin follow. But again, the percentage change in which they actually do during the direction, even when they are correlated, is different. So volatility of these assets are completely different, right? Bitcoin is a higher volatility index, and therefore, guys, at bottoms, on bounces, on drops, it moves a greater percentage. And that's why we saw Bitcoin outperform the stock market, particularly since the start of the year on that rally, in comparison to what we have seen here, guys, to the stock market. Let's go ahead and get into Bitcoin now, guys. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. So, high time frame stuff, and then we'll get into the short term. Let's talk about our zones. Let's talk about the price action on the higher time frame, the trend. Then we'll talk about the 4-year cycle, and we'll talk about the possibility for new lows. If we're going to make new lows, what would it take from an economical standpoint? Also, what the targets would be, and then we'll go ahead and do our short-term analysis and wrap up the video. So currently, guys, Bitcoin is still in a high time frame uptrend. We are in an uptrend. We're not in a macro uptrend. We're in a daily, we're in a weekly uptrend. We had a reversal structure develop from our falling wedge pattern. Awesome stuff. We pushed upwards. We reached our first target, and of course, our second target here. The second target being the yearly low of the prior bull run cycle. We can drag this one across, and you can see, in fact, this was the yearly low of the prior bull run cycle. So incredibly strong support becomes equally strong resistance. And we retested this level, we pushed upwards, we actually sold our Bitcoin at 30,000, guys. We bought Bitcoin at 18,000 and 16,500. We also bought a little bit over here on YouTube, guys. And of course, we sold at 30,000. We're waiting for our next entries, which we'll talk about again in today's video, but perfect trade there so far. Resistance is a resistance until it is not. We've developed a short-term support right over here at 27,200, which we'll talk about in the short term, but more or less, guys, we are still in this uptrend. However, for this uptrend to continue, guys, we do need to break above this $30,000 resistance, which we'll talk about in a second. Now, here's the thing, guys. Here's the thing. Our next zones for the downside, if we do start moving down, say hypothetically we break through support levels, when is this chart actually losing its uptrend strength? Well, the uptrend is still intact until 24,400 is lost. If 24,400 is lost, that is when we enter a new downtrend. That downtrend could potentially result in new lows. However, for new lows to be validated, we need to lose 18,400. So this is more of a neutral slash danger zone, okay? This is bullish territory above 25.2, and this is macro bullish territory above 30,000. That's how I'm looking at the charts right now. That's how you should be looking at the charts as well. So currently we're still in an uptrend. We are targeting upwards. However, like I said, every pullback should be considered a healthy pullback unless 24,400 is lost. Moving upwards, our upper targets lay at around 31,700 to 32,300. This is that local top zone of this consolidation we had back in June 2022, and of course the next macro resistance sitting between 38 to 40,000. These aren't random numbers, guys. We can confirm all of this with our visible range volume profile. You can see the moment we jump up above 30,000, volume starts to significantly kick off to around 32,000. Here's where it gets very interesting. You can see the moment we jump over 32,000, we see an increase, guys, in our VRPV, and that increases until we reach a massive chunk of resistance at 38 to 40. So we know 38 to 40 is a huge area of liquidity, a huge area of historical trading orders, and thus a huge area of resistance. We know that rising VRPV from 32 to 38 represents an increase of historical trading orders and thus an increase in historical resistance as the price move upwards. To break through or push through an area of increasing resistance, we need increasing volume. So it will require a lot of volume. With increasing volume requirements, we generally have decreased volatility, and therefore the move from 32 to 38/40 would be a slower move than in comparison to something like 25.2 to 28/30, where we had a gap in the VRPV. Okay, guys, keep that in mind. So those are our next targets for upside. Those are our current ranges. That's the bias. That is what we're looking at. So let's take a look at the 4-year cycle. Let's take a look at 30,000. Let's take a look at why it's so important, and again, we'll come back and do a technical analysis in a second. So the 4-year cycle, guys, is of course an incredibly powerful tool in predicting the overall trend for Bitcoin. And again, it's been going on for a couple years now, of course about 14 years or whatever it's been. And again, the 4-year cycle is not going to permanently continue. At some point, the 4-year cycle will break. It can't last forever. But while we have this data, we have to use this data to our advantage, and we can use past data to influence or at least manage and predict what the future could potentially be. That is what analysis is about. That is all we're doing here, and that is how we form probabilities. So based on historical data, we can see the yearly low of the prior cycle has always acted as a major flipping point in the macro trend. And regardless of whether it's a 4-year cycle or not, we know that strong support becomes strong resistance. And when strong resistance breaks, it acts as a macro or higher time frame trigger for a macro continuation. So we have seen before, every time we monthly close above the prior yearly low of the bull market, we generally enter a higher time frame uptrend, and that is going to remain. So we do know for a macro trend to develop, for a macro uptrend to develop, we need a monthly candle close above 30,000. My next entry point for Bitcoin, if I'm looking to rebuy, is going to be at that monthly close above 30,000, or is going to be within the support range between 24.4 to 25.2. So what else is the 4-year cycle telling us? Well, it's telling us for us to see a new all-time high, we need to break over 3 things. So for a bull run to start, for us to go to a new all-time high, we need 3 points of validation. Point number 1 is the date range trend. We can see that on average, our bear markets, according to these red zones, last around 13 to 12 bars. 13 to 12 bars. We can see that our recovery phase, our reversal phase, is 16 to 17 bars. And within this phase, we do generally see quite a large movement. We saw 300% guys, 160, 300% in 2015-16. In 2019-20 guys, we saw around 200%. And of course, we can very well see a large rally. We've already seen around 88% in this year. So the recovery zone is not a bull run, but we do generally see aggressive uptrends occur. However, the bull run requires three specific things. One, the date range trend. This generally occurs after the halvening. We can see the average date range trend for the recovery phase going into the bull run is 16 to 17 bars. Therefore, we can assume that the bull run is likely to start between March 2024 to April 2024. Number two, we look for a clear of the prior bull run first dead cat bounce high. This is represented by this dotted trend line. The local high of the first dead cat bounce represented by the dotted trend line every time we close a monthly candle. Above that level, we actually move into a macro uptrend that is incredibly more volatile than the macro uptrend or the uptrend we had prior to that monthly close. You can see the angle of this uptrend compared to the angle of that uptrend, the angle of this uptrend compared to the angle of that uptrend is a lot steeper. So that signifies that the moment we break above that level, that is almost a trigger point for a surge in volatility, a surge in volume, and of course that is a trigger for confirmation of a new all-time high for Bitcoin. And the next and final one is a break over the monthly Ichimoku cloud, and we can see the monthly Ichimoku cloud baseline is represented by a thick red line, and it generally occurs at the same time we get the date range trend. So we're looking for that. So a lot of people say we can still see new lows. What would it take for new lows? And here is the really interesting thing a lot of people miss. Macro price movements are almost completely linked to economic data. There are three main drivers of price action: technical indicators, support levels, all of these things. These analysis tools, they're descriptive and predictive analytical tools. But what actually drives price action comes down to three things: economic, political, and social impacts, influences, decisions, or policies. This is what drives a macro trend. Now I'll break it down. Political, certain governments ruling out, banning, or implementing certain policies to restrict or, again, provide access to cryptocurrencies in funds, we're seeing multiple countries accept Bitcoin as payments, stuff like that. Economic, CPI data, of course, inflation, interest rates being a big one, and of course, social perspective. We've seen when the banks have collapsed, Bitcoin has generally reacted very positively. We have actually seen a rally for Bitcoin when the banks were dropping. Again, societal impact and again, person to person, influence and perspective is very, very important in macro trend. So the big one being economic, because economic is the big one that drives macro price action. So for the Bitcoin price, for massive corrections to occur, for corrections that will take us to new lows, we have to see the current narrative that has been developing over the last 2 or 3 months shift. And the current narrative is that CPI is falling, interest rates are coming down closer to a pivot, okay, the cash rate is about to flip, we're about to go into a pivot, the cost of debt will decrease, and if the cost of debt decreases as a result of interest rates falling, companies, individuals, consumers, whatever, they're going to have more money and more risk tolerance to purchase risk assets, and asset prices are going to rise. When interest rates are low, companies take on debt to acquire income producing assets, and they buy these assets, and it pushes asset prices up. When cost of debt is low, the available household expenditure increases, people have more money to afford to buy assets, asset prices rise. We saw that exact depiction in 2022 when interest rates are incredibly low. They were around 0%. They were super low in general. Companies were buying assets like mad. Money was getting pumped into the markets like we've never seen before. And the exact reversing happened here in the bear market. We saw interest rates go up. We saw, again, the cost of debt rise. We saw the complete opposite happen. So unless the narrative changes, we do not expect that downtrend to occur on the macro chart. And that is what I've been saying, guys. Every downtrend that occurs should be considered a healthy correction to some extent, unless we get a flip in the narrative, as the economic narrative is going to be determining the macro trend. And we've seen it play out time and time again, guys. Now, we haven't pivoted yet, but the macro markets don't require a pivot to actually move. They move on perceived systematic risk. So I'm not going to get into it too much more today, but one of the main reasons why it's unlikely to see any low, aside from the charts, is that the macro environment, the economic environment, the narrative that is being pushed is a bullish narrative, not a bearish narrative. So unless that changes, unless CPI starts to rise, unless inflation starts to rise, unless interest rates start to rise, the probability of a new low isn't there. And it comes down to probabilities. If we did see a new low, say it all went to shit, we're looking for a target of 14 to 12,000. Okay, if it all goes to shit, we're looking for a target of 14 to 12,000, which is going to be this level to this level. Okay, we can see a gap in the VIP right over here. Again, low volume range, entering resistance, support right over here, huge chunk of orders. The probability of dropping any lower than 12,000 is very, very minimal. It could happen, but of course, it's very minimal and it's very unlikely with the current economic environment. Now, I'm not saying buy Bitcoin here. We bought Bitcoin down over here. We bought Bitcoin over here. What I'm saying now is, if we look in the macro trend is decent. It is building upwards, but we do need to break over 30,000 to validate a macro uptrend, but it is still looking quite strong. So keep that in mind. The probability for new lows is quite low right as now. Let's get into the short-term price action and then wrap up the video. Short-term price action, guys. Bitcoin has bounced from a major support level right over here down at 26.8 to 27. We said that a loss of 26.8 to 27 will result in a continuation downwards, and that is likely. If we do lose this 26.8 level to 27 level, we are going to clear this low volume range and move all the way down to about 25.2 to 24.4. That, of course, is going to be retesting this lower support level right over here. Huge catastrophic move coming for Bitcoin if that does play out. We do have potential support at 26,000 right over here in this chunk, so that is also a key level to look for if it does get lost. Until then, guys, we do need to start clearing these local high points to see any sort of higher time frame uptrend continue, or small time frame uptrend continue. As I said in the video a few days ago, for a bullish trend to develop, we need to see the price break and close above 28,000, and we need to find support on this lower support range now before we develop a support upwards. So on the small time frame, if we do pull back to this level and lose this level, we are continuing toward this lower support. If we do pull back and find support on this level, you can expect a gradual rally back upwards to retest 28.6 to 28.8. If we break over 20.8, we are most likely rallying to retest the upward diagonal resistance point of this line. We need to create a new higher time frame structure to then invalidate this trend line to continue any higher. Again, that is all for another video. Say hypothetically we continue upwards, guys. The trigger for a macro continuation upwards, of course, is going to be a monthly candle close about 30,000, and of course we need to break the 30,948 trigger point for a continuation upwards to our next major resistance. Let's get into the immediate short-term price action, guys, then finish up with a technical analysis on the daily and the small time frame, and then wrap up the video. The immediate short-term price action is not looking ideal. We are seeing some weakness develop in the charts over here, guys. We can see the RSI breakdown has already occurred on a small time frame. We have our momentum trend right over here. We have seen the momentum has flipped downwards. We have a shift, a negative shift in momentum right over here. Negative momentum. Momentum is pushing down as price action is pushing up. We know this is weakness. We have weakness in the trend, a bearish divergence developing right here on the smaller time frame. This could potentially result in a continuation down to retest 28,000. That is what I expect on the short term. I do expect this weakness to develop, and I do think this weakness is going to take us to around 28,000 before we see any sort of continuation back upwards. So watch for a rejection 28,000, watch for a bounce at this level before we move back upwards. Let's get into the even smaller time frame and discuss our current trend. As we can see on the even smaller time frame, we do have a uptrending support line right over here. I would not be expecting a break down until it happens. So watch this downtrend. We have a potential, guys, inverted. Well, we have a potential, guys, right over here, inverted head and shoulder. If we do break down from this level, we can expect that continuation downwards to retest this lower range. So watch that lower range for a breakdown and potential continuation downwards. Let's get into a macro chart really quickly and end up the video on the RSI. Real quick analysis. RSI, market cipher B, and then we can wrap up the video, guys. Let's take a look. Bearish divergence played out quite nicely. We saw negative momentum flood into the market for a few days prior to this drop. We were warning you guys on this channel about this for a few days. We did see that flood in. We have seen it drop down quite a fair bit, and let's see if we've developed it on the higher time frame. Higher time frame 3-day, we have seen that drop down on the higher time frame of the 3-day. Again, finding temporary support over here. Momentum is still now pushing downwards. We have negative momentum here on RSI. We have decreasing positive momentum, weakening positive momentum on the markets over B. This could potentially develop into a longer term frame, a downtrend to around 25.2. But again, for that downtrend to actually initiate, we do need to see a loss of that trigger point, which we said on a smaller time frame is going to be 26.8 to 27. Thanks for watching, guys. I hope you enjoyed. That is the end of today's video. A quick update, guys, you can also find us over here on the Crypto Academy. If you learn how to trade, if you learn how to do analysis and TA like I do, you can contact us via the email contact over here. We'll send you all the information about a 10-unit course, teach you everything right over here. Thanks for watching. Thanks for tuning in. I'll see you guys tomorrow.